Good day, traders. This is Mdlalose with another daily Forex update. I hope you're going to be having a good trading week, and I hope you're going to be using some of the tips that I give you now to apply in your own trading. So, before we go ahead with this video or these daily tips for today or these secrets for today, secrets of trading, kindly subscribe and make sure you hit that bell notification button so that every time I post a video, you are one of the first people to watch my video. And don't forget to share my videos with other upcoming traders. Okay, yeah, this is very exciting because what I want to show you today is one of my best techniques when I'm trading. I'm actually going to do another continuation video as well from this one, but now I just want to show you one technique, even though I'll be explaining another technique again, how I use the strength meter to actually make money, how I use the strength meter to my advantage to make sure that whatever I do, I actually get high probability trades based on the strength meter. Okay, so let me go ahead and show you exactly what I mean. Yep. Let me go ahead and show you exactly what I mean so that you can understand. But yeah, the trade that we're going to be looking at today is the Aussie against the Japanese yen. It's a past trade, yes. Other people say, why are you showing us a past trade? It's something that happened long time ago. It's okay. I need you to learn from this so that you can understand when to stay away from the market, which is very, very important. Right. I am going to be showing you how to identify strength meter when the market is oversold or when the market is overbought. Yes, using the strength meter, obviously that's where you get high probability trades. You can clearly see up here, this is Japanese yen, by the way. This is Japanese yen. The green one is the Aussie, okay, Australian dollar. You can clearly see at this point here, when these lines were above that yellow line up there, and this one was above, below the yellow line down here, this tells me that for today, this move downwards, it's almost exhausted. You might want to look at other trades instead of trading Aussie yen, or you might want to be looking to reverse this trade. So you can clearly see, if I can actually minimize the chart quickly and actually throw in the Aussie yen chart on the actual platform so that you can see what I'm talking about. Yes, this is exactly where we had those extremes. In fact, Oz was right here. Look at what happened here. The market just pushed one bar down, 115-minute bar, and then from there started reversing, and you can clearly see how the market started reversing to the upside. Why? Because at this stage here, you identified the extremes on the strength meter, which is very, very important. I know a lot of people have been taught to look at the strength meter when it's diverging, and when it's converging. But another important thing is to identify when it's at its extremes so that we can make an informed decision whether you want to be jumping on that trade or not, whether alternatively you'll be looking for possible trade reversal or trend a change, if I can put it that way. So this is an example of Aussie yen. It's very easy to understand, so you can use something as stupid as as a trend line. Sorry for that word. You can use something as simple as a trend line break, because you've seen the extremes, and then when the market breaks the trend line, you're actually looking for buying opportunities. Yes, a simple trend line break, it can also help as well. Or I mean, you can look at something, maybe an indicator, a simple moving average indicator. You can look at something like a moving average, maybe a 6, which is one of my favorite. Not really particular reason, sorry, this is a 5-minute chart, so I will need at least a 48 okay, not a 48, sorry, not a 48, sorry, so it's too slow. For the time frames that I trade is too slow. Guys, please note that I'm just showing you an example, right? So here the market was kept. This is actually a 15 moving average, 15 EMA, and you can clearly see where the market started trading above. You could potentially identify a buying phase here. It didn't go right away, but I mean, here at this stage here, you were saved from taking a very bad short trade because the market was about to reverse against you. So you had to make sure that you're on the right side of the market based on those extremes. Right, moving ahead, I can also show you the very same technique. That's why today I don't want to confuse you and teach you a lot of things. There's other tricks that can be applied on the strength meter, but today I just want to show you only the extremes, because you guys, I'm giving you my whole trading strategies. Some of you might have followed me on social medias. Some of you might have followed me on Forex Factory, where I post my entries, my live trade entries before the market even moves. You'll realize that my success rate is very high. I think last week I did not lose any trade from Monday to Friday. I think I had 100% success rate on GBP USD. Yes, 100% success rate on that particular pair, which is very good. Today there is quite a it's actually 2 bank holidays, so I don't know. I'm in trades now, but to be quite honest, today I am not trading. I'm simple because I'm in front of my computer. I have to take something that looks like it's a good trade, and really, I'm just really playing around. Nothing really hectic. That is my euro yen trade, but really. To be quite honest, I don't call this trading because there is so much holidays today, and usually when that happens the markets are very slow. You might want to stay away from the market. Very, very important. You might want to focus on other things like doing free YouTube videos or learning or watching most of my videos during a day like this, because you won't get much setups today. And then another trade that I want us to look at is let's look at OZCHF on this particular day. OZ against the Swiss AUD CHF. You can clearly see AUD CHF. CHF is at its extreme. AUD is also at its extreme. Right at this stage here, you are looking for a trend change or a trend reversal. Okay, you are looking for a simple trend change. That's what we are looking for. So if you are looking things like your average daily range, when you see this happening and your ATR is like very high, and you might want to start actually looking for a reversal at this particular zone here. It reversed around about 25 pips from that. Good trade if you ask me, because I mean at the end of the day, 25 pips, if you're trading good lot size, is actually good money depending on how much you trade. So this is one of the examples as well on OZ against the Swissy. And then another trade that you could have potentially looked at reversing or looking for a reversal, it could have been easily Oz against the dollar. So let's look at the chart. AUD USD. There we go. AUD USD. Oh, that one was a lovely one. Hey, look at where you actually took the trade. Let me actually zoom in a little bit more. Right, look at where you took the trade. Check this out. From there, when it hit the extremes, you could have started looking for, to be quite honest, a reversal even here. You might have started buying here, so reselling here is still okay, but look at where it reversed. I mean, even if you started selling here, you only took a hit for a few pips up here, and then from there the market started falling and actually going your direction. You can clearly see from that point the market actually started heading down because the market were coming from extremes. I know other people do not really trade overbought, oversold, because they don't know how to trade overbought, oversold. But now I'm showing you a trick that can actually show help you to trade oversold, overbought. Here's a trade. I don't know if it was a lousy trade or it was a good trade. Let's actually check this out. NZD against the Japanese yen, way below the extremes, way above the extremes. So let's see if at that particular zone we had a reversal on the market. Quickly, I don't know why it's not loading. NZDJPY. Let's see. Come on. Okay, this one is a different case. This one is a different case because this stayed below the extremes until roundabout here, where JPY started popping above the extreme. Okay, that's another important thing. Another trick is if it's in the extreme, right, you do not actually reverse it right away. Reversing it when it's on extreme, it's an aggressive way of trading, which is still okay, because I mean, you cannot win every trade in forex trading, but if you wait for it to come up above the extreme, it's an advantage, because here, if it comes back above this zone, above the extreme, is telling you, okay, right now yen is actually strengthening, which is actually the perfect time for you to be looking on that particular trade. Okay, so there's quite a lot of examples. So when the market is actually above the extremes, for me personally, you see above here already, I am not looking for any trade. As long as now it has crossed above the extremes, yeah, it might continue to go, but it's like a red flag for me, because I don't want to be taking a trade where I know that with high probability I might actually start losing that trade because of the market coming back from the extremes. All right, this is another example. Let's see how this one did. NZD USD, and see both of them coming back from the extremes. Didn't really do that much, you know. It kept on that zone until it went in, and then you got another trade to actually trade that direction. But it's very, very important to understand that when the market hits the extremes, you want to be very careful on the type of the trades that you take, because when it's on the extremes, it's telling you that, you know, it's a little bit exhausted, and you might want to look for the door. So for example, right now there's a couple of trades that I've set up. As I said that, guys, today, honestly speaking, I am not really trading. I'm simple messing around because of the bank holidays. It's one of those days that I try to stay away from the market, because I'm a full-time trader. It's difficult for me not to look at the charts. So if it's a maybe non-farm day, I just trade 0.01 just for me to get, you know, just to trade, you know. But on a normal day, you know, I'd ramp up my lot size, I ramp up my volume properly so that I can make money. But on days like this, like today, it's just simple messing around, taking trades, you know, with very small lot size. I mean, also this is one of the trades that I've actually taken today. GBP NZD, it's trying to push on that zone, and wara. But the most important thing, guys, watch out for the extremes. Watch out for the extremes. Watch out for the extremes, because that's where you usually get your market reversal. As I always say, share this video with your friends, subscribe. Mdlalose. Have a blessed day.